What's going on? What's going on? What's going on? Happy Sunday to everybody. Hopefully everyone's doing absolutely wonderful. Happy Sunday. Come on in, come on in, come on in, come on in, wherever you are. Hopefully you are staying warm because I've heard there's a freeze. I've heard from the grapevine that there's a freeze around the country. So just making sure that everyone's safe, everyone is covered, and yeah, we get through this thing, and yet again another wild season of weather, of global warming, so to speak. So, what's going on, Dennis? If anyone else is able to, you're more than welcome to type down in the chat. Tell me where you're from, tuning in from, if you've been invited here for the first time, or you're just tuning in randomly, kind of sneaking in, and you watch the videos and you've come on to our live. Sometimes we have a lot of shoveling. What's going on, Vince? How are you, man? How are you? So I know the videos and the pictures on my social media platforms don't do it justice as I'm showing palm trees and sunshine. So just know it's not intentional. It's not intentional. All right. What's going on, Trent? Making sure everyone's safe and good. All right. We are at the top of the hour, 10 minutes into our 4 o'clock PST, 6 p.m. Central Standard Time, and 7 p.m. Eastern Standard Time. Hopefully everyone's doing absolutely wonderful. Let's go ahead and get started here today, this evening. My name is Dr. B. Welcome into our Stock Sermon Sunday. If you've been invited here, like I just stated before, we have new people that have been invited on, coming on from all different types of walks of life around the world. So I just want to welcome you here. If this is your first time, or you just tapping in for maybe a second, third time. If you've been here for a minute, you're in Leverage University, which is our live trading university, as well as education, mentorship, all those good things. It is our inside of house. Then you already know how we do. All right. So in today's Stock Sermon Sunday, we're going to go over this Super Bowl of the stock market. I've been mentioning that for the past couple of weeks, and I've gotten some messages around, what does that mean? What do you mean the Super Bowl? Like, I know the actual Super Bowl for American football is coming up in a couple of weeks, but what's going on? We got 2 games on tonight. So if you're watching those in the midst of this, I appreciate you, because me versus American football, the real ones know that this will change our lives. In American football, it really doesn't matter who wins unless you got some money on the game, But Cleveland, Ohio, I am part of Dr. B's Leverage University. Awesome. I appreciate you. Sure, rub it in. All right, let's give a rundown of how this is going to go, and then I'll share my screen per usual, and we will get down to business. So this week, the reason it is the Super Bowl of the stock market is because we've got 2 big and many different events that are going on. I would compartmentalize it into 3 different ways. Okay, number one, it is the start of our earnings season. So we kind of got to kick off the past couple of weeks with our financial earnings. And then we had Netflix and we had Intel last week and a couple others spurred into there. But this week is the starting off of a lot of our major tech companies. So Microsoft, Tesla, ASML in the semiconductor sector. It will go further on throughout this video tonight. Okay, this live tonight. So that is number one, why this is the Super Bowls, because those earnings reports move and shift the market in very dramatic ways. Our second reason why this is the Super Bowl in one specific week is because we have our FOMC meeting. For those who have never heard of that, don't know what that is, that acronym, right? Just plain and simply, that is the meeting where the Federal Reserve, Federal Chair Powell, and his cabinet, right, are going to be making a decision of whether we rate hike, rate pause, or rate cut. So if you've ever wondered, or I know a lot of people are new to the stock market and trying to learn the entirety of the game, right? We hear about these things on the news, right? I know I used to back in the day when I was like, oh, I guess we had rate cuts today. I didn't know it was today. This is very important for traders and investors to pay attention at the state of the economy on rate cuts, rate pauses, or rate hikes, right? Now, in this specific meeting, there is more of a prediction or a probability that we will have a rate pause. There will be unchanged. Nothing will really happen. but that is the probability right now. We had a couple of rate cuts at the end of 2025, right? We know we cut rates 0.25% or 25 basis points 3 times, okay, going into the end of the year. But overall, right, it's really, in my opinion, it's kind of just like here's your rate cut, okay? Now, why is this important? This is why I want to go into it today, okay? Because the rate cuts, rate pauses, or the rates in general are not for today, okay? They're not for today. So when I explain to mentees or anyone on the streets trying to understand the stock market and they're praying for more rate cuts, I need to refinance this, I need to refinance that, I want to take this HELOC out of my home, I want to lower my credit card interest rates, government, can you help me out? Any rate cuts that are done right now are not for now. They're for a year from now, 2 years from now. Okay. So the Federal Reserve is still reacting to the things that they did last year and the year prior. So 2024, 2025 is the that's what we're seeing the reaction of those rate cuts, right? And we'll talk about it a little bit further in today's live around how 2022 planned out when they started to have to hike rates, right? When we went too fast and we had to pull it back and say, oh man, we've got to actually hike rates, right? We're over, cutting the rates, we're pausing, all those good things. We'll go into that. And number 3, okay? Number 3 is essentially going to be this whole economic debacle / trade war / Trump tweeting Truth Social whenever he wants to, okay? So we have a lot going on that will move and shift the market one way or the other, okay? So this week, if you are a long-term investor, which everyone should be, now is a time where you do your due diligence and we talk about the companies, right, that will be the winners for 2026 and beyond. So we look for companies that are on a discount. We also look for companies that may be a little bit overextended that we might have to pay attention to maybe be patient on and pull back to us, right? If those companies' earnings are very strong, such as a MU, right? NVIDIA, we're paying attention a lot to. Palantir, right? Apple, Microsoft, Tesla's running back up. People are wondering, when is Tesla going to break out to 500 plus? All these questions are going through long-term investors' mindset saying, this is going to be the season. This is going to be the earnings report. They're just going to absolutely rip, right? But I have a video on the channel that you can watch after this later tonight or throughout this week. Just type in earnings, Dr. Brian Trades, okay? And you can learn how to trade or invest around earnings and what we look for, okay? So that is the reason why I wanted to get this jumped off as people kind of trickle in here so you understand the sentiment. So if you're new here coming in, I always give a sentiment around the market so we know how to approach the week. So that's a long-term investor. A trader, okay, if you're a trader, which many people are on here to learn how to trade options, to learn how to trade futures. I don't know why my inflection of the voice went that way. Don't pay attention to that. But trading options, contracts, futures, and just overall how to trade and generate income, okay? This week, okay, we need to understand there's going to be extreme volatility. Now, that means we can make good money trading, but also means that we have to be pinpoint precise. We have to be a little bit more patient. We have to take our profits, all right? You heard that too, didn't you? He's like, why did he inflect on that options thing? I didn't know what that was. But that is the reasoning why, is because we have all these things going on, right? So when we see profit, we want to take profit. When we see up 20, 30%, trim it, leave a runner. Right. We'll be doing this in live trading inside of Leverage University. If you're not yet there, I know a lot of people are on their seats. We've been having a lot of attention from our community members expressing, hey, you need to come here, listen to this, take your time, do your due diligence. You're more than welcome to reach out via our WAP platform, okay, and our support chat and say, hey, I just want to understand a little bit more before I jump into this. I get it, right? I am just like this in live trading, okay? I'm teaching. Maybe you feel the calmness in my voice. I'm educating what I'm getting in, what we're getting out of, right? All those good things that you can learn, all right? And be a part of. So if you're having trouble trading by yourself, or you're maybe getting a little bit of success and you want to step it up and understand, how to do it with us, you're more than welcome to. All right. So everyone good? Can I get a one in the chat? I know that was a mouthful of me yapping for exactly 10 minutes now. So just wanted to get that out of the way so we understand, when you see the title, why is this such a big week? I thought it was just another week, because I'll talk to people and I'm like, man, this is a massive week. And people are like, huh? Why? Like, it's just another week of trading. I'm like, okay. You don't know what's going on, right? So we'll share what that. Thank you, Chris. I appreciate you so much. Vincent, Chris, I've been seeing you a lot on the YouTube, so I just wanted to shout you out there. I appreciate you so much down in the chat. Thank you so much for being on here and supporting the channel just by showing up and listening. So, Crystal, thank you so much. And if I'm calling you by your YouTube handle and it's a different name, I do apologize. All right. Cool. Everybody's on the same page. Let's jump into it today. All right. All right, so here's our Discord. Here's Leverage University. Many of you have seen it, okay? So just really quick rundown, just in case you're curious, all right, how this works, because I know I've been coaching, if y'all didn't know, for 8 to 9 years now, approaching a decade. So life coaching, business coaching, entrepreneurship, building various different businesses, funnels, website design, merch, e-commerce, all these different things. But my primary business or educational is intellectual property, education, teaching. So if you're like, man, this dude sounds like a professor, like he's like actually teaching this stuff, is because that's where I started. That's what I do, is educate and teach. All right. So within that, I'm very, very, I guess, anal, so to speak, around when people jump in or when they invest into something or they want to learn something further, how do they step into it and have structure? So when you jump in, you'll see here our WAP platform here. Okay, many of you are already inside of our newsletter. Okay, so you'll see the Leverage Forum where I'm posting just updates. So if you're not yet in here, right, this is where I'm giving updates, maybe just little bitty insider things that are happening very quickly. That's where you'll see I post a new video, so on and so forth. Sometimes we post a little bit of discount codes potentially, or you can ask questions. You see here right in the support chat, I'm not going to open that up because that will reveal some names, but support chat, that is where you can message us and say, hey, I've got more questions, and I'll guide you through it there, and our team will guide you through it, but it is me, right? I did have a question as well. Hey, Dr. B, you also do one-on-one mentorship. I may need that in the future. Is it one of your team members? Am I getting coached by somebody else? No, it's actually one-on-one with me for 6 weeks. So we're jumping on Zoom calls for 6 weeks. Okay, one-on-one, you pick the date, and we're actually going through everything based on your specific scenario. So if you're busy, or you've got a full-time job, or you've got kids, or your schedule can't be aligned with live trading, or whatever it might be, and you're like, hey, I don't know how this can work for me. How can I trade when I'm, busy all the way through the trading session? How can I learn to swing trade? How can I learn to long-term invest and still generate income? But y'all are moving so fast. I know, I don't think this is for me, right? We're not that type of group, meaning this is inclusive, meaning you can trade, you can invest, you can do whatever you want. Do you guys do long-term? Yes, we have long-term investing channels. I just gave some. Do y'all do crypto? Yes, I give crypto levels all in our Discord as well. So just want to get that out of the way, as people may still be on the brink of taking the next step. The trading floor here, you can see there all of our live trading sessions if you ever want to review them, or just realistically to, check me, right? So if you're in our group and it's like, man, this dude is saying he called out X, Y, and Z, or he traded this, it's all live recorded, right? So you can go back and see the actual trade that we took, right? And all those trades are recorded, and we do trade reviews as well. Trade ideas, those are things that we have ideas on with the chart. So if you're a person that just needs levels, charting, buy zones, things like that. And then we're coming out with our learning center here, which are all of our courses and ebooks. You can see the full entirety of the stock market, our options launchpad. And then if you didn't know, I do have expertise in the entrepreneurial business credit funding space. So if you're a business owner and you do need that, so have multiple other businesses as well. E-commerce, drop shipping, that is developing a very simple drop shipping store. And it is ready to go, folks. As you can see, if you want to pick up any Leverage merch, that is ready to go. I'll be releasing that to our Leverage University members first, and then this week I'll be dropping it for everyone else that wants to support the channel. All right. It's like, dang, that's a lot of stuff. Get to the value, but had to get that out of the way. All right. Only time I get some of y'all live to answer questions since you don't ask questions. Right. Cool. All right. Let's go to our economic calendar here. Okay. Economic calendar. And we've got, here's what we got on the docket. So on Monday, we've got durable goods, 8:30. So that'll come out an hour before the market opens. It should move the market just a little bit. We'll see a reaction. We've got Tuesday consumer confidence. That will be very big. Any 10 a.m. data is always going to move the market one way or the other, give a sentiment of the market. And then here is the big dog day. Okay. The Federal Reserve interest rate decision day. Okay. At 2 p.m. Eastern Standard Time in the afternoon. I'll be creating a YouTube video the day before to understand, if you haven't watched those videos before, how to prepare for trading on that day. But that day can be very tricky, choppy, back and forth. So there's a certain way that I like to trade that day if you are trading intraday, day trading, making income each and every day. Okay. We like to take trades first thing in the morning within the first roughly hour of the market, get off, let it settle in. It's going to probably be very choppy, right? And then wait till the afternoon, see a reaction with Federal Reserve Chairman Powell and what he decides to do. And then typically when we make a move, Thursday and Friday are going to be very highly volatile. Now, at the same time that that's happening, we also have this packed earnings schedule. Okay. On Tuesday morning, we've got United Health. We've got Boeing that we also should pay attention to. UPS, very good dividend stock there. It is back above $100. It is bouncing very, very nicely. So I would definitely look at UPS if you're a long-term investor and haven't picked up any shares, not financial advice. GM has been running very significantly. So as it's been running all 2025, kind of want to just kind of take a look at that. American Airlines, Northrop in the defense space, that might have some type of movement. Some of these, it doesn't mean I'm trading them. Okay. It just means I'm paying attention to the strong companies that have been running. Like, can the earnings back up the move that we've been seeing? Or was it a fake run up, very similar to how we had Oracle run up through earnings, partnership with AI, OpenAI? Oracle is just the new massive winner. And then it comes out and says, okay, and pulls back from 350 back down underneath $200, right? So that's a perfect example of earnings and how earnings can actually highlight the strength of a company going forward with their revenue and their estimated earnings per share, okay, EPS, as well as their forward guidance. How is the company projecting things forward, all right, is going to be very, very key. Now, I'll highlight the ones that I like to trade or that I would look for trading. For those that are going to be trading on their own, or for those that are inside Leverage University that we're going to be trading live. Okay. I do like to trade Starbucks, so I do pay attention to that. It could be interesting to trade. It's starting to build some momentum. ASML is going to be a big one here Wednesday morning. And just make sure that we're still looking good. Okay, so we still sound good. I want merch. Love it. I feel like people, would have been excited for that. All right. ASML is in the semiconductor sector. Okay, so the semiconductor sector, as we know, NVIDIA, AMD, so on and so forth. Intel could be decent to watch out for this week. Can Intel recover? Because Intel dropped on decent earnings, but had slightly iffy forward guidance. Okay, that's why it pulled back and dropped. Okay. So I will be paying attention on Wednesday morning, which is the same day. This day right here is the same day that the Federal Reserve makes their interest rate decision. Okay. So at the same time he's making an interest rate decision, he makes the interest rate decision, whether we pause or cut, there's not going to be a hike. But then Microsoft comes out after hours. Then Meta comes out after hours. Then Tesla comes out after hours. Then we got IBM comes out after hours. So do you see the massive Super Bowl of the market that will be coming out after the market closes on Wednesday? Well, Dr. B, what does that mean? How do we take advantage of that? Right? That's the big question. Like, what do we do? The gold standard, if we're trading, okay, is to wait post earnings. Now, I know some of y'all are going to be rewatching this. I know I have some folks on here that hide in the back of the videos and it's like, man, I'm about to put in a lotto trade. I'm about to kill this thing and put in a call option or a put option before the earnings to see what it does. I'll get to that. Okay. I'll get to that for those of you that are thinking that way. But the gold standard is to wait until after they report and we trade these companies the next day. Okay. If they give a decent A+ trading setup. Okay. If they're in certain supports and they drop and we have a good reaction back to the upside, or if they run, right, and they continue to run, or we get a pop and a big gap and we pull back, right? So it's better to gold standard trade post earnings. Okay. Well, Brian, okay, we get it. Dang, don't have to yell at us. I'm telling you, people, I don't know how many folks have come along the way and will message me privately and say, dang, like, why did Amazon drop? It had great earnings. I'm like, stop trying to play earnings like it's a gamble unless you want to. If you really want to learn this thing, trade it gold standard. And then when you get the opportunity, take your chance every now and then, right? But it has to be, as we call it in our group, a strategic lotto, okay? A strategic lotto. That means I have charted it out. I believe that Microsoft will beat. I know the levels ideally on its expected move, how far it would move. If you didn't know, we can show how far a stock will move. There's a calculation, but I will not go into the calculation of that for my non-mathematics folks. But let's look at the earnings. There is a nice Twitter feed here. Where are they? Come on. Where are they? They usually give the expected move. Let me see if I can pull them up here. Okay. Earnings watcher. Let's see. Yep. Okay. There's how the chart would look. Okay. So you can go onto this Twitter feed and they do a good job of doing the calculations for us. And you can see on the left and right hand side, the estimated percentage up or down, plus or minus. So, well, how does that help us out? It tells us how far and what levels the stock should move to. It's his expected move post earnings. Okay. So if I look here on Starbucks, plus or minus 8%. So it can drop 8% or rise 8%. So you look at the stock, calculate it, 8%. Okay. Roughly Starbucks is around 96, I believe, $95, $96, almost to $100. So easy mathematics. What is that? 10%, move the decimal place. That's around $9. So Starbucks will probably move $7 to $8. Okay. Plus or minus. Same thing goes here. So you can look at this chart and see the expected move. We got, Microsoft here, 5-6%, Tesla, 5-6%. So when you're taking a strategic lotto or you're trying to trade pre-earnings, it's very important to understand that where is it headed? How far is it going to move? Is it even worth it? Right? So I'm going a little bit further there. For those that don't know, there's also what we call implied volatility. That means the contracts, if you're trading options, are going to be extremely, extremely overextended and overvalued. So when you open up, if you're not the right way and you're not headed in the right direction, it is going to go to potentially zero. All right. Did I hit it on the head for my beginners? Okay. For those that are seasoned, you know what I'm talking about. Okay. That's why there's a rationale of why we don't ideally trade pre-earnings, right? So what does that mean? That means I'm not going to be really looking at any setups on Microsoft Monday, Tuesday. I'm not going to be looking at any setups on Tesla Monday, Tuesday. I'm not going to really be looking at any setups on any of these things pre-earnings. So if you have other traders that you watch, any other investors that you watch, and you ever hear this, which is why I love our community here, is I'm trying to expand the industry, meaning when you go elsewhere and you hear someone say something, you know what it means. So if they say, hey, I'm not going to trade Tesla this week, you're like, why? Because they have earnings, because its implied volatility is higher. The contracts are much more expensive. So you're overpaying for that move. Can I get a 5 in the chat? Does that make sense? 5s in the chat. Does that make sense? Everybody on the same page. Does that make sense? I want everyone, because some of y'all are still on the sidelines of joining, and that is okay. So if you're trading on your own or you're maybe in another group or whatever, I want you to know first here or be explained as to what that means. All right. We good? Perfect. All right. Everybody's on the same page. Let's keep moving. I'll jump into charts. Okay. Okay. Let's go back to our earnings calendar. And definitely Apple, definitely Visa, definitely SanDisk, SoFi on Friday morning. Western Digital is probably going to be big there. Caterpillar always has a nice move. MasterCard as well. I can just keep going on and on. Deckers, DEC. I know it's an oddball out, but that houses Hoka for those that wear Hokas or have heard of Hoka, or those that wear Tevas, right? For my outdoor folks, right? You know, right? The sandals. Okay. Just saying. Think of the company. So go do your due diligence and research. Okay. But the chart looks great on deck. That's not going anywhere. So just looking for those companies, they're kind of hitting in here to say, man, that could be a decent long term. I might not want to trade it. But yeah, just maybe take a look at that. Okay. American Express has been beaten down a little bit. That could be interesting. And then Verizon, a great dividend stock. Okay. ExxonMobil, Chevron should be big as well because we know that oil has been moving based off the Venezuela situation. Just massive week. So this week is about getting an understanding, getting green, getting those scalps, getting nice movements, getting confirmation. But guess what's going to be even better? Next week's trading week. Because guess what? All this stuff is going to be out of the way. Clear sales to get FOMC out of the way, get all these earnings out of the way, and then we can free and clear trade Apple next week, Visa next week, Microsoft next week, Tesla next week. Get me? Just know I know from experience I've messed up a really solid week and then looked the next week and then I was like, dang, I should have just waited. I should have just scalped and made my money and then just waited for the next week. All right, let's jump into the charts. What's going to happen this week? Let's get some levels on SPY, okay? Let's look at the bar, okay, on our weekly chart here, okay? This was my full kind of masterclass I gave on last week. Get rid of all that. All right. So if we know all that sentiment that I just rambled on for 20 minutes before we got on the charts, if we know all that, then we can come on the charts with a little bit of a slight bit of bias, but we react off the levels. So if I know that the Federal Reserve is ideally potentially going to pause rates, that is not what the overall market wants. But if it's already priced in, the market could just disregard that. All right. If Federal Reserve Chairman Powell continues to push back on Trump, right, because Trump wants him to cut rates and says, we're not going to do that. I don't care what you're talking about because there's no reason to cut rates. There's really no reason to. Inflation is slowing, right? Job market is stabilizing a little bit, but it doesn't mean the economy is good, but there's no indication to cut rates any further right now. And he doesn't want that, right? So if that's the case, then I'm looking for a little bit of confusion / consolidation / we're grinding / we need to choose a direction. Okay. So this gives me first bullish nature if we're not overthinking that. If we look at that candle bar on a weekly from last week, that is a bullish candle, another higher low there, firm higher low, and in my opinion, a soft, not even a higher high there, but a new high printed there from the previous couple of candles here. But if we look also, we have a lower high set as well. For those that are still learning the charts and the candles, if you look at this high close right there, that's 694. Then we closed at 691. Then we closed at 689. So all those are lower highs. So as we're trending upwards, this is still a lower high set. Okay. If we look from last week, we can move this. And if you're a trend line person, you can look at this. You may have heard this, or I've mentioned it before, that rising wedge fell out of the wedge, is retesting the wedge. And typically what happens, and it could happen, is that we fail the wedge and that was just a retest and we come back lower like that. Okay. So if you've been watching the channel for a while, I'm not saying I'm always right. I don't project to be right. But if you've watched the reactions and you're like, dang, that kind of did happen what he was talking about on Sunday or the previous video that I watched, right? is that just comes from experience and watching price action and levels and how things should react. Okay. Now, if this is bullish, what do you want to see if you are a bull this week, right? You want to see a positive dovish reaction, meaning a bullish reaction from Federal Reserve Chairman Powell on Wednesday afternoon. If we see that and he pauses, but he has a positive reaction, or maybe he cuts very slightly, right? And we break above, I don't really believe we're going to have a big move prior to the report, in my opinion. I think we're going to consolidate, going a little higher, then coming back down, and then coming back higher, and then coming back down. And we chop around until that news data on Wednesday afternoon and all those earnings that we just looked at. Okay. So if you know that, you know what type of trading is going to take place ideally on Monday and Tuesday and potentially into Wednesday, which is chop back and forth. So if you're a person waiting for a big move and breakout, or you're a person that's saying it's going to dump, right? What happened kind of last week is we pulled back and then we chopped back into a range, and then we chopped in this range for 2 days right there. Okay. So if that's the case, you can trade a range if you're a SPY trader. Now, for my futures traders out there, I do trade futures. I did grab up a couple more take profit trader accounts. Okay, I think that's, in my opinion, one of the best deals or firms. Not affiliated, not marketing it, none of that stuff. I am affiliated with a couple others, but I do trade the prop firms and do trade futures. But I use options as well to trade futures very well. So I might be trading some futures this week if we do have a little chop, just so I don't have any decay on my options contracts. So for anyone Leverage University, just know I will still be trading options. But as you saw last week, I did take some solid futures trades as well. Okay. So when I have chop, I don't want to be worried about theta decay. So I did grab up some futures accounts and I'll be copy trading those. All right. Let's jump into the bottom end of the range here on SPY. You want to watch this 686. That's the level. Okay. 686 is the level. Now, if we use a Fibonacci here from the top to the bottom of that candle, okay, you can see there that 38.2% retracement right there, or the golden pocket, is sitting just below 685. The 50% retracement is sitting right at 686, right? So what does that mean? That means if they want to drive it down even lower underneath that 686 and then bounce it back up, right, and do that, they could. All right. So where would that also be? That would be right above this previous rejection that would turn into a support, right? What do we say? Break, retest, and then go. Right? So this is going to be your kind of bull bear pivot, as we call it, which would be right around this 686. If we're above 686, it's still going to be, I would say, more neutral, or in this case, bullish. Okay. Above that 686. But you cannot get extremely bullish going up into 690 or 691. As you can see, a lot of these top wicks coming at 691. 691. So if you look at that and you're trading it this week, or you're watching it, you're like, okay, I'm in a chop zone. Let me not look for maybe big continuation one way or the other until I get it. But here's how it would look. I'm just satisfying some other people that are very visual. Okay. So if I draw a range like that, that's essentially how we're looking right now. See that? We take off the Fibonacci. It's essentially how we're looking. Bam, 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 bam. And then trying to just rotate one way or the other. Rotate back up, breaking a new high with a solid candle close above, like that. Or, which is my more so kind of, I have a slight bias, but I don't lean to that bias. I'm always looking for both ways, so I don't have too heavy on one side. Meaning, if I'm a little bit more cautious / I think this can pull back, a little bit further. I think this is a retest. I think that's a lower high, and I think it can do that. I don't want to be too heavy on that side, so I may just wait until it gets underneath that 686, underneath 685, and if I see a candle like that, I may wait and just see if that continues lower. All right. but I don't think they're going to let anything big or massive happen before big data or news. Okay. So there's your SPY chart there. Okay. Let's see if there's any gaps really quick just to satisfy that. So I'm going to turn off my after hours here on the Webull platform. And I did highlight, if you want to learn more about how I use Webull, okay, the video is up on the channel. Okay. Some might even see, if you're a person, you might even see, well, Brian, is this a bull flag consolidation? It could be, right? But it's more just a consolidation. I wouldn't say bull. I wouldn't say bear, right? And there's a little bit of an unfilled gap right here, okay? So if we do try to push higher, right, and we're down here and then we rip back up, that's just filling some imbalances right there, okay? A little bit of an imbalance, a little bit of a gap that didn't fully close. It's very, very slim, right? It's like a 50-cent gap. So not major there. But if you can see that if it breaks back below these levels here, okay, back below really that 686, I believe what I just saw there, a little bit of, yeah, you can see those gaps that are starting to pop up there. All right. So if you see it break down, then we're coming down into that gap and it's coming right back into that 685, 686 level. And we've got some support back down there, which will be a retest of that previous high. Okay. So you see the kind of indecision, even with the gaps, which way it could go either way, right? It could rip down here and cool. That was a lower high. Not surprised. Cool. We're going a lot lower, retesting those lows. There's a gap down there. Awesome. Or it could say, cool, this was actually a bull flag. We popped. That was a higher low. And then we pop higher and we go into all-time highs. All right. So that's my analysis there. If I pull on the daily moving averages really quick before we move on to Qs, you can see the daily moving average stacks are above, right? And for those that are new to the channel or still very beginner, just know that everything I'm talking about on my Stock Sermon Sundays are also on the channel in the trading playlist for education. So it's like, what is he talking about moving average? Got a video for that. What is he talking about earnings? Got a video for that. What is he talking about with these gaps? Got a video for that. Okay. So that is the education that you can learn on your own. And then you have a real idea like, okay, I may need some little support. Okay. So I'm giving the value out. And if it's not working for you, that's where you may need to say, hey, I need a little bit of support because it makes sense, but I'm not fully understanding it. Okay. Moving average stacks, as long as we're above these daily moving average, all the way above the daily 200, nothing major there. Above the daily 100, you can see it bounced, moved back, use it as support, bounced it, reclaim those, and that's where the strength came in. Use them like waves and a surfer riding above. And then if we're a little bit indecisive at it, just be a little bit cautious. It could do either thing, okay? It could break back down to the 50, or it could use this as support above that daily 20 and break above, okay? And that's typically what you'll see pre-big data / earnings. All right. So nothing major there, just a little bit of indecision. So there you go. Qs. We've got a little bit more data here, meaning the Qs, meaning the tech sector. This is going to be massive. Now, a lot of people are looking for a couple different things on QQQ because QQQ houses some of the major tech companies that are going to be reporting. Microsoft, Tesla, all the ones that you just saw, Meta, it just goes on and on and on. I'm not going to list out the NASDAQ 100, but just think tech. I do believe ASML's in there. I'm not sure. Don't quote me on that. But many individuals, and if you're a bull, you're like, man, I think the tech sector, AI is still very strong. I do believe so as well, right? But we have to react to say, is this a higher low? Is this a bullish pennant? And we're just going to absolutely rip like that. That is very much a possibility. But guess what's going to be the catalyst for that? These earnings reports. Okay? These earnings reports. Okay? So very key there for QQQ to look at these levels as we have a clean rejection point up here underneath 629. If we clear this week above 630, you're going to get a squeeze ideally into new highs, 636. You got a $6 move and potentially into new all-time highs. So all we're looking for this week on Qs and the NASDAQ is going to be in QQQ's reference above this 630. All right, above 630. So ideally, I'd want an hourly close above that. Otherwise, you can see here it tries, fails, tries, fails, tries, fails. Okay. So we cannot take it or assume up until it clears that 630. And then we can use that as support and make sure it holds. All right. So clear line in the sand there, a little bit clearer in my opinion than SPY, because yes, SPY has these highs, but also, you know, it's just doing some funny business. 691 breaks that low 690, gets above 690, comes all the way back down to it's my opinion. All right. If we look at the daily moving average stack on Qs, okay, we've got the daily 20 sitting at 620. So that would be kind of our pivot point, ideally, to see what it does around 620. You can see in the after hours session here, we are getting a little bit of a pullback in the futures market, 621.58. I will talk about gold and silver as well, as those are continuing to break new highs. I did trade a little bit of gold in the futures before I jumped on here. But 620, I just want to kind of watch what it does at 620. But all you want to look for at the start of the week is, do we hold above previous week and previous day highs and lows? Okay. So that'd be 618.74. Okay. Maybe 618 to be a little bit more certain, but I'd watch that daily 20 to see what it does there. And you can just use the daily moving averages as your point of control / interest. 615, 620. What does it do in this area? And then you got 626 above. So again, if you know, meaning that when I'm giving these levels on Monday is kind of that, hey, that's that pregame. How's the market moving on Monday? Then I'll react off levels. I'll probably rechart, right? And that's when I make my video Monday afternoon. I'll tell the community members as well, like, hey, I know we talked about on Sunday, but hey, I see some weakness a little bit more after Monday's session. I see a little bit more strength. Okay. So there's QQQ. Let's move really quick on a Fibonacci retracement here down to the lows. Okay. And we can see that 38.2 is sitting right at that moving average there on a daily. So that would be a support range that if we pull back into 615, do not think that's just going to flush. It could just be a pullback into 615, and then we will rotate back up potentially. All right. Cool. 615, break underneath 615. That's where maybe it gets a little bit dicey. Okay. And I know for some of you, you're looking at, well, it says 615.94. Right? I react off the areas. I'm a price action trader. So that just means that when it gets in that zone, I'm watching how the stock or index is moving at that area. So if I see solid candles moving into there with no bottom wicks and it's just flushing and flushing, I don't see any strength. I'm like, that's not a strong candle for a bounce. So I'm reacting when it gets to these levels. Right? So that's the difference when you hear traders or anyone on these platforms. When we give levels, that means watch the level to how the stock reacts. If you see it holding after 15 minutes, you see it holding after 30 minutes. That's why the candles are so important to watch if you really want to learn how to trade. Is it wicking like this? You see how this pushed down in there and then big wick off of that level right there that once was a solid red candle. And that's a day, right? So it was once this, it came down into that level, end of the day, bounced, and closed like that. That's how that candle moved. So if I see something like that, then I'm like, okay, that's a little bit more strength. Okay, cool. I'm maybe a little bit more confident taking it up. But if I see a candle close for a day like this, is that very confident? No, not necessarily. Okay. Cool. Vice versa. Same thing on the upside. Need to see a candle close a day somewhere like that. Right? Close above this previous candle close here. That green candle close. That'll be 627. That will give a little bit more confidence for the next day to continue. All right. IWM, just absolutely monster trade. I got to show you all this. Okay. I got to say this. Okay. We put in a trade. I put in our swing trade chat. Okay. So this means the swing trade is I'm looking for this trade to play out over a course of a day, 2 days, 5 days, 10 days, 20 days. Just carry it over into the next day. You cannot make this up. When I said IWM, I'm in 270 puts for Monday. Average cost $128. That's where the chart was with a gap below and just absolutely massive. Guess how much those contracts are now? $600. Two contracts would have paid for y'all's weekend. $1,200 would have paid for someone's card note, couple card notes, maybe some insurance, and you'd only put in $250-$60. So when people say, do you want to go out to dinner? You want to go out to eat? You want to buy this shopping things? Like, actually, I'd rather buy some contracts and then go buy the thing. Actually, I'd rather pick up some more futures, prop firm accounts, and then I'll go buy the thing. So in 2 days, that's just with two contracts. What if you had 10? Well, Brian, did you take the trade? Yeah, I took the trade. I only got 15% out of it. Then I got stopped out. And then I woke up on Friday, as the group did. We woke up on Friday and it was all the way down at 266. So that's the possibility of that based off a gap fill trade, a signal lower high here. I just want to show that. So in this case, what do we do with IWM now? Okay. Where do we say, if you've watched my moving average video, that typically the stock likes to move back to after it's been extremely overextended, if y'all are learning, okay? Look at where it's potentially headed. It gets extremely extended over the daily 20, the daily 50, and the daily 100. Well, as we use those as supports, guess what? They want to come back and kiss them. I like to think of it as dating. Okay, you're getting a little bit too on your high horse. Okay, you got to come back and give me some love. You're getting a little bit too comfortable. I need a quick date. But yeah, that's it. I like to make these analogies. You know what I mean? You got to make it fun. So in that case, I'm looking for IWM to come back to roughly that 258 to 260 area. Is sitting at 263 in the after hours. So it's getting very, very close to that area. If it does come to that area, what do you want to do? You want to react. It's been very strong as a previous retest of the highs. And then you want to look for maybe a bounce off of that daily 20 moving average. Okay. Very similar to what it did somewhere in here, pulled back to the daily 20, held. Now, it can break below the daily 20, so I do not want to assume it could just absolutely smash through it, right? Or we could bounce, all right? We could bounce back up, create a lower high, and then flush right back through it like that, okay? Now we're in a full potential pullback, all right? That's how the candles would ideally look, okay? So do not short into support with puts. Do not also chase, okay, as well. Okay. We react to levels. So there's your IWM chart. I actually like how fluid it is. Pay attention to IWM this week because IWM reacts. Why do you think this is pulling back? You may be thinking about it in your head. Let's see if we're aligned. IWM houses a lot of the small and mid cap companies. Small and mid cap companies need rate cuts because a lot of them are in heavy amount of debt, borrowing, doing partnerships, growing, trying to get off their feet, trying to develop their profitability margins higher. So they need rate cuts, or they would like rate cuts. So if there's a potential for no rate cuts or pauses, who do you think is going to get affected a little bit more? Potentially IWM pulling back, right? If there's no rate cuts. So they're moving into the rate cut decision, and then they react based off of how that decision goes. Okay, just go in your historical context, look at all the FOMC meetings and see how IWM reacted. I do like trading IWM during the FOMC week and also FOMC day. All right. SMH, that's our semiconductor sector here. All I'm going to look at is the daily 20 moving average right there, which is sitting right at 385. This houses our semiconductors. So if it does need to pull back slightly, it is very strong, as you can see there on a 4-hour chart. Still creating higher lows, higher lows, higher lows, higher lows. But guess what? What are we doing here? What are we doing for those that are learning? We're grinding and channeling. Okay, so when we grind and channel, typically at some point that channel will break, right? And it will potentially give the move back for a deeper pullback. Okay, How you know that? Well, look at Amazon. Okay. We popped, grinded, broke the channel back to the downside, and we pulled back. But guess what? It pulled back so it can get stronger, grab up more buyers. All right. Same thing that potentially could happen or did happen with IWM. Okay. We grinded for a while right there. At some point, I like to wait for the channel to break to get more volatility. It goes up, right? We're doing it again, but we're back down below that 267. And this could be a little bit bigger of a pullback back down into those mid 250s. All right. So if I'm looking at SMH, it looks like it's doing the same thing. So what do you think I may be looking for this week, depending on the earnings? Which way does it break? Do we get a big break to the upside and it's still strong? Or do we get a break back down underneath 400 and we hold underneath 400? That will give me an indication of trading NVIDIA, AMD. We do have ASML on Wednesday that will be in the semiconductor sector. Okay. Can I get a check-in really quick? Check in. Can you just give me a 1 in the chat if this is good thus far? All right. We're slowly starting to wrap up here. I'd love to take any questions in the chat. Give me a 1 in the chat if you are understanding, if you're getting better understanding, or you're just curious. You're like, man, this all sounds right, but I'm still trying to, this is a lot of information. Yes, it is. Yes, it is. But it helps you make a decision a lot more informed than just making decisions based off feeling and say, I'm just going to trade whatever. All right. Okay, cool. We're all checked in. We're all good. All right. Just making sure. All right. Let's look at gold. Gold is just absolutely on a rampage. I've just been trading futures on gold. I mean, if you want to trade options, we can trade options on gold, but gold is a different beast than trading equities, right? Versus a commodity or a metal like this. Because as you can see, a lot of the big moves on gold are happening in the after hours session. So you almost have to really, if you're going to trade options with gold or buy shares, if you hold shares for many people, or you have physical gold. But if you want to trade, you can also trade options on gold with GLD. And there's other vehicles as well, but that's the main vehicle for trading options. So you really have to trust that gold is going to continue the overnight session or continue into the weekend, because a lot of the times the move has already happened. Right? Do you see all these gaps on gold here? And it just gaps up and then it gaps up and continues and then it gaps up and continues. So gold's already at, for GLD, already at 463. So it's already up here, right? And I've got to continuously just almost get a Fibonacci extension on it because this thing is just absolutely parabolic. Okay. So I really don't have an answer for gold because a lot of people are asking. I'm really more so just like trade the trend, get some scalps in if you want to trade it, leave it alone, wait for the pullback to happen if you want to buy gold or buy more. Dollar cost average, I think it is a little bit extended, but people are pouring more into commodities because of safety and uncertainty in the overall market. As we can see, SPY and QQQ are just chopping around, consolidating, doing funny business. Right. A lot of tech companies are going up, down, and they're just pouring into safety. All right. So there's gold. Got nothing really there as far as intraday right now, but we can chart out levels if you have more specifics. VIX, I think we'll get some volatility this week. So if we can see the VIX, very interesting structure here on the VIX. The VIX measures our volatility, and it also gives us an indication sometimes if we're going to have a spike in volatility or a potential pullback in the overall market. So for those that are new to trading or investing, the VIX, if it pops or if it goes up, essentially it is the opposite reaction of the overall market. So when we popped on the VIX like this, or when VIX was in support and we popped, right? What happened to the market last Sunday? Tariff news from Trump. So we had a spike in the VIX, but guess what? There was a gap. So the other charts can also help you out, and why that's important is because if there's a gap on the VIX, then the VIX will pull back. Guess what will recover? The overall market. So it goes in the opposite direction. If I'm looking at the VIX here, right, the volatility might pick up and it's kind of, curling up here. So if the VIX spikes, what do you think I'm maybe expecting going into that data? Well, maybe an opposite reaction from SPY, and SPY starts pulling back. Get me? So VIX does help us see if there can be a it's going to be a red day, green day, And I told the group when we were in live trading that most likely a Tuesday session or Wednesday session last week was going to be a green day because the VIX needed to fill this gap and cool off. So what happened with SPY? It curled up, and there's the opposite reaction. QQQ curled up. There was the opposite reaction. All right. I'll take any questions on any specific stocks for anybody as we wrap up here. We are right at the top of the hour. We started 10 minutes after the top of the hour, so I want to keep this roughly around that 90-minute mark, but I'm trying to keep it shorter than that, around an hour 15 or so. So please put any stocks down below that you have specific questions on. But let's go over the top watches here. Let's go over, again, I'm mindful of what has earnings this week, so I may get some levels, but I might not trade them. Let me show you a perfect example of Apple. Is Apple a good buying opportunity going into earnings? I think it's at a great level. I think it's at a dollar cost averaging level. Is it, again, I have to follow my rules. Is it a jump into call options, swing, Apple's going to kill earnings type of situation? I don't think it's bad, right? But yet again, you don't know. You don't know the forward guidance. Apple could blow it out of the water and still fall, very similar to what Netflix did. So again, how I like to trade pre-earnings, if this is, it said, how would I trade this if earnings was not in the way? And I would say, well, it's sitting in support. I don't see many buyers stepping up. It's underneath a psychological level of 250, still a little bit weak. The moving averages are approaching on a weekly chart, right there. That's why I'd more so like it. So it's kind of like it's an interesting chart of how I would trade this, because I would, if it was down here, I'd probably take a strategic lotto. Right. So we may look at it if it does fall a little bit further going into earnings, meaning I might look at some call options further out on Apple to go back up like that. Okay. As I do believe they're going to have this earnings report, not believe, but they should have the retail report from a lot of the iPhone sales from the holidays, because this is our Q4 report. All right. So I'll be looking at that from their iPhone sales, which I think is going to be pretty good. As we know, I think it's one of their biggest iPhone releases to date. So we'll look at that for sure back on the upside on Apple. But if you're a long-term investor, I don't think it's bad to dollar cost average anywhere close to the weekly 50 moving average, and then also down into the weekly 100. All right, cool. Options premiums, not too bad on a weekly. I'm pretty sure these will increase, but you see the implied volatility is very decent, underneath 40%. That is a good price for these options contracts. If I go to Meta and Microsoft, these will start to increase this week. Okay. So those will probably be more like 60, 70%. They will start to increase. You can see that Meta's already above 60%. So that tells me that those contracts are going to be extremely overvalued as far as doing something with it. But all right, Amazon doesn't have any earnings this week. So we have Apple has earnings. Google has earnings next week. So Google is free game this week. So I might look at Google for some trading opportunities. I've been liking Google up here, shorting it personally. If we do see it fall below the daily 50 moving average, us in the group inside of live trading, we do like this 323 level. Okay, if it falls below 323 or breaks that level, that is a failure back underneath this level here, underneath the daily 20. If we see that, we could get a bigger pullback back in the daily 50 there if the market is weak. You can see here that's already approaching it, but as long as it's above that 323, 325 area, I'd be very cautious, as you can see a lot of buyers sitting in that zone. All right. If you want to just make it 320 to be more specific, but Google does not have any interruptions this week. No earnings until next week. All right. So Google is free reign this week. I'll be taking a look at how that is looking. Amazon also does not have any interruptions as far as earnings. So we'll be looking at Amazon as well. I know a lot of people are looking at this bullish move on Amazon off of all the moving averages heading into its earnings next week. Right. So if I do believe personally, dollar cost averaging into shares, right, taking a look at this bullish setup, how would you trade Amazon if it did not have earnings? Right. As many people are bullish on Amazon for 2026, which I do believe, I would love for it to crash. Just tell you right now, I would love for it to have some type of oopsie doopsie situation on their earnings guidance or something, and fall all the way back here. That would be absolutely a gift. If Amazon takes off from here on earnings, it's just going to start making a Google move. Okay. Which is what we want anyways. But I really want Amazon to just take an oopsie doots, pull all the way back to 200 or something like that. That would be so much better for an opportunity to get in for the remainder of the year. Okay. Just my opinion. So Amazon sitting bullish right here above 230. Ideally moving to these highs, 250, 260 in sight. If you want to be more specific, that 258.60 and 249 and some change. Okay. So nice bullish flag there. Watch Amazon holding above the moving average stacks here. First one, 236, 230, and 233. So all bullish momentum here on Amazon. If it pulls back into those areas, right, I would not try to short it, quote unquote, as this is looking bullish, but also, as you can see, there's some unfilled gaps down below. So where do they want to push the price of Amazon? Okay. It's holding on by dear life here on this uptrend. Okay. All right. Netflix. We've been dollar cost averaging in the shares. This is my first buy zone here on Netflix, around $82 to $83. If you can get in anywhere around there, not financial advice. I think it's a great buy zone to start building a position on Netflix. If you already have Netflix shares and you're a part of this 10-to-1 stock split, you are good. But if you want to dollar cost average into more, I think a better area, if we do have something that we want to be prepared for, will be down into this mid 70s mark. Okay, just in case something happens, and that would be down into the weekly 200 moving average, and that would be a decent area and some gap fills below. All right, so just be prepared for add 2 and potentially add 3 zone down here. All right, so a lot of room back to the upside on Netflix. It is a little bit oversold, but we don't have any extreme buy signals yet. All right. So you just want to be prepared, positioned, but also understand that there's really not a big reversal buy signal just yet on Netflix. Okay. If you want to put call options out for Netflix, I don't think it's bad. Just you got to put time on it and be prepared. All right. Just saying. Okay. Microsoft has earnings this week, which is why it got bought up. Now, this is a big question here. Like, which way is Microsoft going? I think they're going to beat earnings, right? But again, I follow my rules of the charts. Microsoft, what did it do? All it did was have a trend line bounce, and it is back underneath still the moving average stack. So for me to be confident on Microsoft, very similar to this, right? Bounced. Oh man, Microsoft's taking up. Nope, but still below the stack. Nope, still below the stack. Nope, still below the stack. Nope, still below the stack. Okay. So earnings has to take us back above the stack. So as long as we are below the daily moving average stack, you don't want to get, in my opinion, on options trading too horned up on the upside without confirmation. Does that make sense? Now for shares, dollar cost averaging, I think it's a great buy zone. Right? Buy zone 1, right on the trend line, very similar. Hey, it happened here, Dr. B, yeah, I don't even want to miss this move. Yes. Right? Yes, that does look like a bull flag. Yes, it's right at support. I see all that. Right? But I've been a part of, yeah, that looks great. And then you get into calls and then bam, what happened to Microsoft? Right? So again, I just want to prepare everyone so you understand the difference between, hey, it's a great position for entry, but you got to also know the risk of what if it doesn't go that way, so on and so forth. Or is there true confirmation? I think there's a little bit more confirmation, as you see on an Amazon chart, right? Above all the moving average stacks on a weekly, above all the moving average stacks on a daily. Microsoft is building, right? It hasn't cleared. So where would be the clearance? The true clearance would be back above all the daily moving average stacks, which would be right around 500. That would be the squeeze of all the shorts out of that, and then see if you can get some continuation. Okay. You can look for entry a little bit sooner than that if we start clearing some of the daily 20s, maybe the daily 50 cross, which would be right above 483. Okay. Cool. Meta, same thing, weekly, beautiful hold there of the 600 level. Headed into earnings, could look at a double bottom here. Looks great. Maybe it has a little bit of a pullback consolidation, but if we look at this chart here, this is just consolidation in that channel. If we break above, I can tell you what chart it looks like. It looks like core weave. All right. Look how core weave was stacked underneath here like that meta chart. See that right there? It breaks above, right? You get a little momentum push, you pull back, you hold, and then you can continue higher. So it breaks out of the consolidation. Maybe that's an inverse head and shoulders, higher lows, however you want to look at it. So if I'm looking at meta, you can see right there what it's doing. It's just consolidating in this channel until it decides what it wants to do. So if you get a break back above 680, right, maybe we can get some movement towards that 700 again. Clear 700, we should have some continuation and some short squeezing, stops getting hit for anyone in puts, things of that nature. All right. So bullish consolidation right here. I would just say consolidation, so to speak, holding above those moving averages. So if you're in meta, again, dollar cost average, do your thing, and then we'll trade it more strategically once their earnings reports, or maybe if y'all want to do a lotto, that's up to you. They are pricey. All right. Tesla, what we got? Tesla has earnings this week. So again, another one that is on the chart. So Microsoft, Meta, Tesla all have earnings, so, as well as Apple. So we'll not be trading Tesla. I think Tesla's overvalued. I really do. Now, does that mean anything? No. I think Tesla can get some momentum into earnings maybe, and maybe it holds up this stack and moves higher. I just don't like this chart. I think this is a mess right here, personally. All this scalping, if you've been successful, that's awesome. Hey, I've been successful. I caught, Tesla down here and I've been catching it. That's cool. But I do not think it is confident either way. Some people may look at it as a cup and a handle. Like, that's the cup. This is handle, bullish consolidation, and we're about to rip, Dr. B. I don't know what you're seeing. I see all this stuff. So we can have a conversation about all these patterns and your predictions, but a trader, in my opinion, long-term investor, that's fine. Trader, we react, right? I'm not trying to, say it's going to take off. I'm going to react based off of my structure, my moving averages, my support and resistance, price action building. So 460 this week. If you want to take Tesla, 460 back to the upside, not much above that. You should get it a 480 move higher, and it's just in this channel right here. Okay. If you're a Tesla person, you can also trade TSLL. If you're, not one to put as much money in Tesla, but you think it's going to do one thing or the other. TSLL is the leverage version. As you can see, the price of it is $18. You can also trade options, and they are a lot less pricey, and you can put time on it. So you can participate in Tesla if you are trading with another group, or you like to trade Tesla, or you hear people trading Tesla, but you don't want to spend the amount for the contracts. You can trade TSLL. Okay. NVIDIA. No interruptions on NVIDIA, so my trusted NVIDIA will be getting traded this week, and y'all know it. Okay, so we're going to be making money on NVIDIA. If you've been seeing my trade reviews or, social, I love NVIDIA. We've been absolutely killing it, okay? Now, NVIDIA, does this look like bullish consolidation? It is trying. Some people may say it is ugly, right? Like, why are you trading NVIDIA? This is absolutely trash right in here, right? That's all a perception. Their contracts are fairly inexpensive. I can scalp it for big moves. It has really good liquidity. It's been gapping up, filling gaps very nicely. We've been popping and fading it. There's a gap right there. Respected that gap, roll back up into it off of 179 back to 186. I mean, these are 30% on your money, 40% on your money, 100% on your money moves. So where's NVIDIA again? It's back up into the highs here. Pre-market is at 186, right? So I believe it's going to fill this unfilled gap in balance. So that will pull it back to 184. 184 is our bull bear pivot. Okay. So 184 tells us, hey, are we going to stay above 184? You can see 184, 184, 184 bounce, or are we going to break below it and continue back down to where we were going? Okay. So we got a short window there. I'm not really a big fan of how short that window is. I would love for it to, pop a little bit higher, close to 189, and then hit it. Right. If it gets too close to that 184, I might just have to let it go or just scalp it and say, hey, it's too close to support. Okay. So NVIDIA, very nice there. I really want this big move. I don't know what's going to do it. Maybe it's ASML. Maybe it's that SMH weakness, but I really want this. I've been praying for it. Okay. I want this. 189 all the way back down to 172. Right? I want that trade right there, but I do want NVIDIA ideally leading into their earnings, right? Increasing their price to earnings ratio a little bit better, and maybe we get a drop down into earnings back down towards that 170. If we can get that, that would prime us a little bit better, in my opinion, leading into earnings, right? So my opinion there, AMD, nice double top here action. We can react off this level. AMD has been absolutely a behemoth, massive move, right? Grinding up higher, but guess where it is? It is right back into a very, very heavy resistance slash supply slash ceiling, just very big level here of 260 to 264. Okay, there's reacts around 263. There's a big reaction right there around 265. If I put on a daily chart there. So I do like AMD where it's sitting because we can react off this level. Now, where's the daily 20? All the way back down to 224. So Brian, are you saying like this could happen with AMD and we can get a IWM move? Potentially, but I've got to see confirmation, maybe taking out a previous day low, taking out a previous week low, something like this that gives me a little bit more confidence out of there, just to make sure, because as you can see, every dip is being bought, dip getting bought, dip getting bought. But eventually this will happen. I think it will need a catalyst, right? In my opinion, there's a couple of gaps. Gap one, bigger gap down to 235, right? And then more gaps to fill down there. All right. Just my opinion. So need to react off AMD, but I do love the risk to reward back to the downside a little bit on AMD. Okay. Because everyone's getting horned up here. I was telling my group recently, I did a masterclass. I do one every Thursday inside of our university, inside of Discord. Every Thursday, I'm doing a masterclass where we talk about different strategies. So where do people feel the most pain? For my seasoned traders out there, or if anyone that's heard that, I want to inflict as much pain on a buyer and or seller when I'm trading. So if I'm a buyer up here at 266, waiting for a big breakout off of a grind, I'm going to, or most traders are going to try to inflict as much pain as possible. Do I want to be a heavy buyer on AMD up at the top end resistance after it's gapped up, gapped up, gapped up, gapped up? That's a rookie mistake, in my opinion. That's a late retail buyer up here. If you didn't catch it here, if you didn't catch the momentum here, if you didn't catch the momentum here, in my opinion. Now, can it go further? Yes. But where does a heavy big money buyer want? They want to trap and squeeze or short. Even if they don't play puts down here, they want to drag it back down, inflict as much pain, get a discount down here and ride it right back up to where it is. And so everyone up here is like, oh my gosh, it's right back to where I was looking for it to break out. Exactly. But your entry was off. You bought at the highs with call options. They rip it right back down and then rip it right back up. And you're like, this is rigged. No, it's not rigged. You just got played. So that is the trading game, is we look at the charts and see where the traps or the levels that we react off of. Where can I inflict as much pain? Down here, guess what they did? They inflicted a lot of pain on short sellers. Everyone thinking that this gap was going to get filled. This gap was going to get filled. This gap was going to get filled. Brian, what gap are you talking about? That one right there. So as much pain, man, puts is going to get filled. Man, puts is going to get filled. Man, puts. Nope. Squeeze you right out. Bam. All right. That's why I respect the levels, saying if we're in support, I'm not interested in put options. If we're in resistance, I'm not interested necessarily in call options if we're in a big weekly or daily resistance. We're good? Okay. AVGO, same thing there. MU, just absolutely strong. It will have a pullback eventually to its moving averages. Just need a signal there. INTC, big watch here this week, is sitting right at the daily 20, right at our daily 50 moving average. Could be a decent bounce opportunity for a squeeze back up into that gap. So maybe watch INTC for a little bit of recovery potentially as it curls up here. Can we get a nice little move back to potentially 48, 49, 50? Okay. If I pull a Fibonacci retracement here from the highs back down to where it is now, which is 43.50 in the after hours, that's sitting right around there. Okay. 100% retracement will be back to the highs. 50% will be right back to 49. And then that 38.2 will be to 47. So I could take it potentially from 43 back to 47, and it'll be like that. Okay. So that might be on high alert just in case, because contracts are going to be very expensive. Earnings is out of the way last week. And then they did have decent earnings, and also could put time on the contracts, right? So a little bit of a safety move here this week for INTC, because I can get contracts next week and still pay underneath $200 as a day trade. All right. So everyone in Leverage University or anyone that's trading on their own, maybe keep a side watch on Intel for a potential bounce opportunity. All right. We're wrapping up. Yes, we short at the top, Tanvir. Yep. Yay. 50% move in 3 weeks. Yep. Silver. Oh my gosh. Yep. Keep going. Very interested to see what Microsoft does with AI in the next few years. Did we cover Bitcoin? Bitcoin, last thing here. If you haven't watched my crypto winter video, go check that out. I know some of y'all don't like watching long YouTube videos, but if you got the time, okay, I covered crypto and Bitcoin recently, and I've been very, very patient on Bitcoin because I'm looking at Bitcoin very similar to 2020. I think now is a great opportunity for those in the miners section. Okay. The miners, meaning I'll go over them in a second, but as you can see here, I've got my crypto watch list here: Mara, Riot, CleanSpark, right? Hut, not Hut. I'm sorry. Yes, Hut, Coinbase, MSTY, MSTR, MSTU. Right? What are all these? These are all things associated with crypto, even Robinhood, as you can see in the after hours, pulling back a little bit further. So as Bitcoin is pulling down, right, you want to potentially, if you are a believer, if you're not, maybe iBit is your thing, right? You like to trade things, same chart, iBit down into $40, mid 40s, things like that. It's underneath 50 now. Okay. These crypto, in my opinion, has been very quiet, right? It turned red after a solid run up to 126 on Bitcoin in 2025 and has been real quiet. Okay. We look at the yearly chart here. You see last year turned technically red, extremely bullish, bam, right back down. And guess what we're rejecting? Right there at 97, pulling down, right? A low of last year would have been right at 74. So that would be a buy zone right there. And then I've got a buy zone at 60. Okay. So I've got a Bitcoin chart very similar to 2022. I've been mentioning it multiple times, and it takes patience to trust the chart and to make sure, but don't be so naive to say it's going to happen and then you're not positioned or you're not paying attention or whatnot. But it didn't surprise me today when I said, oh, look, there goes crypto. I already know what the chart looks like. It looks like a little bear flag. It's coming off the 50 weekly moving average. It's underneath it. Everyone thinks it's going to rip from here, and it's looking exactly like 2021. Look at when it got underneath the 50, pushed back up into the 50. We formed a bear flag right at the 50 weekly. What did we do? Start breaking out of that 50 weekly into new lows. Where was that new low? Right there at 74. And then where is a previous high? 2021 highs right into $60,000. That is my thesis. That is my hypothesis. That is my analysis on the chart. So when you ask Ben or when anyone asks, I can just ramble off anyone on the street saying, yeah, like 60,000, like mid 70s, right? Well, Brian, what is your deepest level? Like what if something crazier happens? Like what's that level, right? If I turn on more of my moving averages here and we do something like 2022 in some regard, which I don't project that's going to happen, but it could. You just never know, okay? Because what the concern is that there's panic going on. Anyone who bought last year is down. Like if you bought first last year, now I'm not saying in the long term, like look at this, like Brian, man, I guess I got into Bitcoin, got into crypto last year, and yeah, I am down. You got to look long term over a course of time on the chart. right? That even if we do pull back to 60, even if we do pull back down into potentially 40, and it gives back all the last 2 years gains, very similar to 2021, right? Look where it retested in 2021, right there at 20,000. Where was that? Look at that retest level. Previous highs, look where it bounced. Going back to 17,000, 15,000, right there. So even if it does give everything back all the way to 40, that's simply a previous support retest at 40,000, but yet it's going to inflict a lot of pain on people who bought in 2024 because it's getting back to their entry point, right? So people are like, man, okay, I don't want to panic. Like, oh, man, this is not going. It's going. Whoops. That's when panic happens, right? I'm getting too excited here. Do y'all see that? So I'm reading buyers and sellers, and if someone doesn't have a chart on them, then they're not seeing this. They're only looking at their account and saying, dang, another Sunday I'm down, or it's not getting back above 100. It was just at 98. Why is it not going above 100? Because look at the chart. What does that look like? Potentially head and shoulders. That's a lower high. It's starting to form bear flag consolidation right here. If it takes out that 83, 80, I mean, we're going to get a little bit of a flush down to the mid 70s, which is a good thing, right? So I'm trying to get everyone to understand the charts as much as possible, because it will lower people's blood pressure so much. It will just have your alerts on and say, oh, look, you get those Robinhood and Webull alerts, and you get at the top of your screen and it told you today, Ethereum's underneath 2,800, Ethereum's underneath 2,700. You're like, oh my goodness, what is going on? But when you know the levels, you know exactly where it's pulling back to. Solana, right back into support. I was talking about Solana maybe getting back underneath $100. These are all opportunities that we're waiting on. So dollar cost average on the way down. If you believe in it, I'm good to go. Okay. Shout out to the Bitcoin maxis. They see 10% drop in Bitcoin and yawn like it's nothing. I know it's very volatile. That's why I'm super patient on when people say load the boat, right? Because I'd rather load the boat at my 2 to 3 buy zones in something that volatile, right? Otherwise, if it's in the middle of a zone, just DCA a little bit. Okay, cool. It's on a dip today. Maybe buy, a little bit here, turn a little recurring buy a little bit there. Cool. Whatever your thesis is or wherever your vehicle is that you like to buy. If you're not too comfortable with crypto, I get it. Then maybe look to the ETF, right? IBIT. Same chart, same thing. You can buy it in your brokerage. You don't have to do the whole crypto thing, right? And just be positioned and be a part of it over a period of time. Bitto, okay, another one right there. I do believe this one pays out a pretty decent dividend as well for BITO. Clean Spark here, located in Vegas. I think this one is an amazing, amazing chart. As you can look at the chart here. Okay, nice curling action then there, been very quiet. Nice bull flag consolidation here, right there. And then just sitting above that $10 to $12 area. But when Bitcoin picks back up or there's some type of positive news on crypto, we know that it's better to be positioned than the chase. So look at that right there, curling off of there on that Clean Spark. So I do like Clean Spark back to 20 plus this year or next year. So maybe look at that if you are interested. Okay. Riot, I like. They just had a partnership, or they are in cahoots with AMD. So Riot is another one that I think looks really, really good. Okay, so Riot, Clean Spark. You can see it popped off that AMD news right there on that double bottom at 13. Popped before you can know it, back to 20. So, yeah. Cool. So maybe pay attention to those if you'd like. They've been very, very quiet for crypto. MSTR, okay, or Coinbase. Maybe watch those if you like. Okay, Coinbase pulling back into $200. I think that is one of the levels that I would pay attention to just to see how it reacts. There's no buyers sitting in this low liquidity area here. Straight up move there, potentially straight down move back in this channel. Where's the channel headed? Right there, back to 170 potentially. So if I get it on a yearly chart, anyone who bought Coinbase last year has been feeling it a little bit if they didn't take any profits, right? So gotta look at that. A lot of sellers at 84K and 77K for Bitcoin. So we may see another liquidation event like last April. Yep, I agree. So we're right on the same page. So all that aligns with my chart analysis. All right. That's all I got, folks. That is all I've got. And we are sitting right at 90 minutes. 90 minutes. So thank y'all so much for tuning in tonight. Check the chat really quick to make sure everyone is good. Going once, going twice. Can I get a 5 in the chat that everyone is good? And we have had a successful stock sermon Sunday. Hopefully you've learned something versus coming on here and just getting levels, and you understand better around the overall market. If you're still confused, maybe tonight is the great time for you to join Leverage University so you can be a part of this massive week and get a better understanding so you can have some guidance throughout the week. If not, please continue to watch the videos on the channel. That's what they're there for. All right. I'm going to drop the link inside of Leverage University for our merch. I did say that people that are inside of our Discord are going to get kind of first dibs. That doesn't mean anything's going to sell out or anything immediately, but I am going to drop that link tonight if anyone wants to pick up one of our hats, hoodies, or a notebook, or we do have coffee mugs, things of that nature. So if y'all want to support that way, you're more than welcome. Would love to have you do that. No pressure at all. All right. Let me know how else I can support as well. So if there's, hey, Brian, can you launch this? Or, hey, Brian, have you ever thought of this? Or, yeah, I would love to see more courses because there's a lot of information on YouTube. I'd like more structure so I can shorten the videos of MAs, this, VWAP, RSI into very short and sweet videos, which we're building out now that a lot of people learn better from. All right. Perfect. Just making sure. All right. I think we're good. This might make some of y'all jealous, but I'm about to go and get in the hot tub. I'm about to go get in the hot tub. You know what I mean? Messing with any futures tonight? Nah, Dennis, I'm not. I've been staying very disciplined, man. I've been very disciplined on just trading in MNQ and MES for the regular trading hours personally. Just read SPY and QQQ so much better during the regular trading hours, and that's how I've essentially messed up the stuff over some accounts, but have passed some nice accounts too. But yeah, I'll be sharing that journey. I'll be sharing payouts, all that kind of stuff. But Dennis, I'm working on 3 50K accounts, copy trading them on Take Profit Trader. So that is transparency there. Yep, just entered a little bit, not messing with any futures tonight. Yep. Cool. All right. A lot to learn, a lot to take in, but hopefully y'all have been educated. So thank y'all so much. Peace, love, and blessings. I'll be inside the Discord just for a little bit after this. And again, if you're not inside, that's okay. Just hit that link down below after this. Join our newsletter. Jump inside of our WAP. That's our front of house. We have a welcome video. You can learn more about myself, my background, how long I've been trading, what else I've done, where I'm from, all those good things. Understand more about the people you'll be joining, and you can ask us questions before making any kind of commitment. Okay, so no pressure, none of that. Cool. All right. Talk